Alright, excuse me, I hope everyone's doing well. So, one thing I'm going to do, I decided I'm going to start doing at times, is I may reference a particular slide in Al's. For those of you that have the course, he has, you'll notice at the bottom right, if you've purchased the prior trading course, then you'll have access to it on his Brooks price action. BrooksTradingCourse.com. You'll see on the new slides at the bottom right, it'll give you the slide number that it's talking about. And the course isn't finished, but one thing I'm going to do is I'm not going to show any of his new slides. That's just for one, that's that's pretty much copywriting, and number two, or piracy, whatever you want to call it. Number two, it's just not right by any means, because I can tell, and everyone who's seen the course, parts of it, Al has given a just unbelievable amount of hours dedicated to this course. So it's unfair, mainly to Al, if I would show him. So I may talk about something and give a slide reference. I might say, like, for instance, the one I was looking at, it's buying and selling pressure. It's video 10, slide, if I can see it, I think it's slide 25. And yes, it's slide 25. And one thing he talks about is, consecutive bull bars, consecutive bear bars. And again, you'll understand what I'm talking about if you can see slide 25. And maybe that'll give you all incentive to give this course a chance and, purchase it and watch it, because it's more than worth it if you're serious about trading. And, I'm going, yeah, you mean call whatever you want. Al is the one who's taught me, from his information, all the stuff that I've learned. So therefore, I'm going to tell you to get his material and watch it. So anyways, good lesson today would be simple buying and selling pressure. In order to do that, we have to scroll back. So look over here, strong breakout. So on a different time frame, it's going to be some sort of a spike, pullback. Channel, here we have 3 pushes down, 1, 2, and 3. Easier to see here, 1, 2, and 3. And what's important to note is, number one, a second leg down was likely after this pullback. So, maybe something like that, I think, more realistically. And again, this is another thing Al talks about in his measured move course, or his new one, is drawing measured moves differently. That didn't really work, so maybe it was here. I think it's this one, because this one's close enough. You can say this one as well down here. But anyways, second leg down was likely. And if we look at today, the one thing we should notice is we have lower highs, lower high, lower low, lower high. Here we got a strong sell-off in a tight channel and a lower low. But look at, these 3 bars up, big tail, not enough to reverse this, probably more down. Strong enough bear breakout and follow through that this bar is probably not going to be, probably buyers below. But again, if you're buying above, you probably need a wide stop scaling in. And notice the buying and selling pressure. 3, 4 consecutive bull bars, and then 5 out of 6, 5 out of 7 bars have clear bull bodies. So it's a sign of buying pressure. Here only 3 out of 5 bear bodies, And then, but look over here. The one problem is we got a breakout, possible second leg trap. We couldn't get above lower highs. Lower high, lower high, lower high. This close, as you can see right here, price went one tick above this close, turned down. So trading range price action. And then, I think probably a lot of always in traders, they probably sell this close or this close. Maybe they get out above. They definitely get out above this bar or below here. Aggressive bulls go short. They go long. If they don't get out below this bull bar because of the buy the close traders getting out, they probably get out on this close. But again, one thing to note, second leg down probably likely. But notice over here, we're not getting consecutive bull bars anymore. 2 bull bars, bear bar, 2 bull bars, bear bars. So we're getting more bear bars than bull bars. And it's possible that we may get a new low. And look at the rally to the upside. 3 bull bars, but shrinking in bodies. Tails getting bigger. And they're getting bigger as we get to resistance. So, three attempts up, wedge. 1, 2, 3. Decent bear bar. A lot of always in bulls. By here it's always in short, so a lot of traders are looking to get short. So if they didn't sell up here, they're probably got to get short below a bear bar. And you can see a lot of traders, a lot of buy the close bulls trying to get out and are trapped. And again, 4 consecutive bear bars, but big tails. But look here, we're lacking in consecutive bull bars. Here's a bull bar, here's a bull bar, here's a bull bar. They're below the moving average. We can't get consecutive bull bars. So probably the first leg will fail and we'll get a second leg down. And, we just kind of got a bear breakout below, this channel. Maybe a wedge right here, 1, 2, 3. And a second entry buy, but at the same time, forcing you to buy under the moving average, which can be a mistake. And then, so really notice here. Here was the first time we really got decent bull bars. But however, bull bar, bear bar, another bull breakout, bad follow through, another bull breakout, bad follow through, another bull breakout, bad follow through. So it's a wedge. We're not getting, even over here, same thing. We're not getting consecutive bull bars, which is really what we need. Kind of the inverse of this. So, and really until you get that, it's very dangerous to, you got to understand what's going on. Until we get consecutive bull bars going up and up and up, similar to, maybe I might still have it, similar to here. So, try and zoom in here. So, spike and channel. So, here's a spike, pullback, channel. 3 push, here's arguably, here's the channel top. Clear channel bottom, 3 pushes down. So, it's a wedge. But again, 2 legs down. Obvious targets, top of the channel. And if we notice on the open, again here, decent, rallies, but again, we're starting to develop more buying pressure. Over here, 3, 4 consecutive bear bars, more down, 3 bars up, sideways, another 3 bars up, 3 bars down. The bull bars are starting to become bigger. Then we gap down. Then look right here, 4 consecutive bull bars, 2 bear bars. And clearly the buying pressure increased. And then we're starting to form a bull trend. So, we need something like this. Al really does a good job in explaining that. The shift in consecutive bars. And if you want a really good reference of that, go to slide 25 in his new his sample videos of his new course. You know, it's a pretty small fee for the information Al's offering. Not really a lot to say about today. It's a trending trading range day. Arguably, trading range here, bear breakout, trading range, more of a breakout, lower trading range. And right now we're somewhere up in here, around somewhere between 21.27, 21.29. So we rallied at the end of the day. And you can see over here, sell the close bears trying to get out of break even, finally got out of break even. We rallied up strongly. So not a lot to say really. If we just zoom out, bear breakout, I don't really like that. I like this more. This kind of shows it well. Bear breakout, sideways, more of a bear breakout, sideways. So the channel's getting broad. So the bears want a double top with over here and a measure move down. Bulls want the exact opposite, and they want this and test all the way up to this channel, which I think we'll get at some point. But we may have to, we could very well close the gap. So that's really all I have today. Not a lot to say about today. A lot of trading range price action, a lot of limit order price action, and if you've got to be really careful with swing trading on days like today, because if you're not, you'll get chewed up real quick. All right, that's all the time I have. Well, let me just look real quick. Let me do always in real quick. For always in, bulls had a chance here and they failed to break above the moving average. So probably always in short on bar 2 right here, or this close right here. Strong enough breakout, so probably at least another leg down. But again, probably always in, bears get out above this bar, maybe bulls get in above or below this bar. A bull who's long up here, they probably got to get out somewhere either below this bar, because of what I said about buy the closed bears, buy the closed bulls, or they get out on this close. But if they get out on this close, you're very low in the range. Probably buyers down here, so probably not worth shorting, but still always in short. So theoretically bears have to get shorts in. So where do they get short? I wouldn't do anything here. I wouldn't buy above. I wouldn't buy above here. I wouldn't do anything in here. I think the first always in trade after here is below this bar on the third bear close. Stop up here. And then what about through here? This gets kind of tricky. It may be always in bears get out above this bar, but they've got to get short again below here. And do they get out above here? Well, if they do, they've got to get short again below here. And I wouldn't get out, probably sellers above for at least another leg down. But this is tricky. And the one thing you've got to be careful with on days like today is not, don't get sucked into the buys. It's okay to get out and get back short again, and get out, and then get short again. You'll give up some profit. You might take a small loss, but you won't take a huge loss. The thing with always in and swing trading on a day like today is, it might sound kind of strange, but the goal needs to be not to lose a lot and to be protective of what you're doing. I say that because when you see bear breakouts, bad follow through, bear breakouts, more bad follow through, strong rallies, but bad follow through bars, then deep pullbacks, you're really just not going to make a whole lot swing trading. And if you're good, you can do okay. But big days, you're not going to make anything compared to days like this where maybe you buy, maybe you just sell below here or sell this close and then you just ride it all the way down and get out over here. You just won't make as much, but the most important thing to focus on is catching the big stuff. Stay away from the little stuff unless you feel good about what you're doing. Because the problem with days like today is, well, it's limit orders. You have traders who are buying above this bar, using a stop way down here, buying more here, and getting out break even. You have traders who buy here, buy more lower, try to get out break even. They buy here, buy more lower, get out break even with the profit. So that's something you have to be worried about. And so that's really it. And days like today, they're confusing, and they're confusing because they're trading ranges. So you just have to be careful. Hope this helps.